I'd say yes, but you've got to be careful and you've got to do your homework. And you've got to know your own limits psychologically. So I think the single most important thing you've got to get to grips with before anything else, before understanding how economics works, before understanding technical indicators, anything like that, you've got to know that you can have master over what's going on in here. And I'm talking about fear versus greed, right? Because if you don't have mastery over your fear versus greed, the two demons in your head, then everything you know, everything you've learnt is meaningless. So what I mean by that is, and I've been here many, many times, and I don't think there's a single trader on the planet who hasn't. You may have set up a strategy, you may have done all your research about this is going to happen today, if this economic data number comes out in a certain way, then this is going to happen. If this technical indicator gets breached, this is going to happen. And then you put your money on, and then it doesn't go according to what you thought. That's the first thing, is the fear. It's the, okay, right, this is going badly, and it's so easy to just listen to the fear and panic, close out, and then everything reverses and you realise you made a terrible mistake. And it's exactly the same the other way around, greed. You get it right one day, market moves with you, brilliant. You're buzzing, you're absolutely buzzing. You have either mentally or physically, you've set a stop loss, or you've set a level to get out, and you ignore it, and then the market reverses. So that's the other one, it's the greed. And you've got to master that first thing before anything else.
I've heard that before.
Yeah.
Why do you think investors should consider trading now at this sort of juncture of time?
I would say we are in a very volatile situation, and volatility means you can make money. The trouble is, volatility also means you can lose money. But as far as an exciting, buoyant market, now is a good time because we've got a lot of geopolitical stuff going on. We've got we've got a lot of economic stuff going on. We're still reeling from the effects of the big crash, and that is still playing itself out, and that means there's a lot of unique positions going on at the moment. So take for example the divergence between America and the Eurozone. So America is they're trying to put the brakes on to a certain extent, trying to increasing interest rates, decreasing quantitative easing, and then at the same time across the pond you've got the Eurozone where the ECB is doing the exact opposite. It's these situations like that are out in the world at the moment are unique to this time, and there's money to be made out of it as long as you know what you're doing.
Are there any markets that you would avoid at the moment?
Any markets that I would avoid at the moment? I would say no, actually, because what I deal in is momentum. So all the markets that I'm interested in are basically doing the same thing. They're all the momentum-based products. So they're all going to be affected in the same way. So I would say you can pick your market. You can pick You can pick stocks, you can pick bonds, you can pick FX, obviously, because it's not about what the market is, it's about knowing which way it's going to go. So therefore, pick any of them. You just got to know which is the right way.
Okay, so I mean, conversely, you know, are there any that are particularly good for young traders and new traders, or is it again same sort of advice?
I'd say the same again. It's about, you know, it's just about volatility.